as looking at, where we are progressing with digital technology, with this form of information that we are coming on with, as an insurer, do you think we'll get to a time where insurance is something that cuts across even different forms? Because looking at accidents that involve different types of motors, bikes, cars, trailers, bikes on bikes, is there a time that there will be a cover that caters for all these groups without looking at the value of this particular car compared to this, that consequently will compensate you kidogo because the accident was from a smaller form of motor?
What I think, at the end of the day, they still have to be separated because the risk profile is different.
Yeah.
Because the risk experienced by the person riding a motorcycle and the risk experienced by the guy driving a trailer, they're quite different.
Yes.
Even the exposure, even in terms of the loss. So in the event a motorcycle is stolen and a trailer is stolen,
Yes.
There's no way these people could have paid the same amount for that, because the risk is different and the exposure is different. What I think can change is the pricing of these risks. Because currently, there's no benefit or segregation in the market whereby a good driver is rewarded instead of a rogue driver. Because let's say currently both of us buy a vehicle, the same type of vehicle, we go with it to the same insurance company, under most circumstances we'll be given the same rate, because they'll just look at the vehicle, but they won't look at the drivers. So let's say maybe me in the past 15 years I've had 0 accidents. You in the past 15 years you've had about 10, just to say for example. So that means in most cases your risk is higher, in terms of the insurance company. So for them, they look at the vehicles. The vehicles are the same, but the drivers are different. So I think with time, what they'll start doing is collecting what you call big data. With the data, you're able to analyze, maybe the historical events of this particular person, their driving behavior, and then price your risk based on that. Yeah, and I think that's the next step where we're supposed to be going.